In this question, you are being asked to decide, are the following statements true or false? These are all in relation to the statement of cash flows. The first statement says that a statement of cash flows prepared using the direct method produces a different figure to net cash from operating activities from that produced if the indirect method is used. So here they are trying to examine whether you understand the difference between the two methods. The direct method and the indirect method are just different ways of disclosing this area of the statement of cash flows. The direct method requires detailed information from the accounting records, and it discloses information that would otherwise remain confidential for the company. As a result of this, it is often less popular than the indirect method. The indirect method starts with the profit figure in the financial statements, and then it makes adjustments for the non-cash items, removing those items that are not cash related in order to reach the net cash from operating activities. Both of these methods will give you the net cash flow from operating activities. This will not be a different amount using the direct method to the indirect method, and so therefore this statement is false. The next statement says that the rights issue of shares do not feature in a statement of cash flows. A rights issue is an issue of shares to existing shareholders. The offered share price is often less than the market value, but cash does change hands. There will be a cash flow as a result of that transaction. And so therefore, again, this statement is false. The next statement says that a surplus on revaluation of a non-current asset will not appear as an item in the statement of cash flows. So here we need to decide, is a surplus on revaluation cash or not cash? If an asset has been revalued, and let's say it's a surplus, it means the asset's going to go up. So they would debit the asset account, and then they would credit the revaluation reserve. No cash has changed hands, and so as a result, it is true that this will not be an item on the statement of cash flows. Finally, the last statement says that a profit on the sale of a non-current asset will appear as an item under cash flows from investing activities in the statement of cash flows. Our profit figure does not equate to cash. When looking at a disposal of a non-current asset, in that transaction, the cash element is the proceeds. If you were using the indirect method, there would be an adjustment for the profit figure because it is a non-cash item. However, in the area cash flows from investing activities, we would put the proceeds figure in instead of the profit figure. And so therefore this statement is false.